Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video. And let's get right into it. It is Friday, November 1st, 2024. And I'd say it's about quarter to 3 p.m. here on the East Coast. I'm Wayne. I want to thank Ryan for taking over last week, but you're all stuck with me again this week. Here's our trusty disclaimer. Here's our trusty intellectual property rights notice. And that is going to do it. And this will even be quick because since I wasn't a part of last week's proceedings, I had, and I'm still dealing with a retinal tear detachment situation that was apparently very serious. So I'm putting an asterisk there. If you ever get a bunch of floaters in your vision, do not hesitate. I'm telling everybody about this because my wife has been in that field. She's part of a retinal surgeon practice and has been for that really many, as I said, decades. And this can happen and be seemingly pretty slight stuff that you're not really concerned about, and it can turn into real risk quickly. And you can actually lose the sight in your eye if it happens, if you do not get treatment quickly enough. It gets a lot more risky with a lot more serious of surgery. So just the public service announcement should let everyone know about that because boy, I went from just wondering why I had a few so-called floaters in my eye to they told me how serious it was once I got to my wife's office. So just wanted to let everyone know. But yeah, so there's nothing for me to review. We are going to try to keep it nuts and bolts. We don't try to get too complicated, go into different techniques, just try to use basic technical analysis tools and techniques, trying to identify the market environment, trying to arrive at a news neutral, most likely scenario. We try to highlight bullish risks, bearish risks, and we always advise that you go to 2x on the speed for playback. And on that note, here is this week's main slide. This is pretty much it. I'm not going to go into anything else. I've done some purple highlighting and changes here. A lot of it is similar to what we've been saying. The reason for that is because October has been a real dud. It's our first line. Let's get our laser pointer going. But the seasonality calendar really veered off course after serving us well for, I would say, nearly 2 years. Maybe it'll come back on, but October didn't really have that kind of rough start to it and then roll over and then start recovering late month. Nor did the VIX kind of lift significantly into the election day, right, which will be upon us very shortly. So a lot of things that I would say are typical tendencies, normal behavior. It was just neutralized. And I don't think October was a particularly good trading month. It was a lot more disappointing than I thought it would be. But that's also interesting in the sense that I look at it as though market overall is behaving as if we're about to experience a typical run-of-the-mill election. And I remember the Ford Carter election in '76, and I'm throwing that out there because there was really, okay, this guy won, and that was it. And that's how the market feels to me. I feel as though that's at odds because with how I feel because of all the contentious stuff that's happened in this century or this millennium. Everything's turned into a battleground, right? Even after the elections at times, there's been legal proceedings, there's been holdups. The market really hates uncertainty typically, not a good thing for the market. There's seems to be a great dichotomy between what one candidate is proposing in terms of the way forward versus another candidate. And so if Wall Street doesn't know which of those somewhat extremes they're going to get dealt, that could be a problem. The reason why I would say it's a bigger problem than usual is because I think many just think that this election is over. There's a lot of people that think that Trump has this very large lead, and that's it. And he very well may. I don't know for sure. I don't really believe that much that gets put out about anything anymore. It's really hard to decipher what the truth is because I think our sources have become so unreliable, I guess would be a good way to put it. But anyway, I just think the market is really underestimating what could happen. And I don't have a strong prediction to make. I'm just hedged up, as a lot of you already know. because I do see that. I just think this is something that could actually become a protracted, drawn out affair that's not very positive for the market. So the gang's done a tremendous job of keeping the pattern alive. And the pattern to me has been most of October. I feel like I've seen a lot of intraday selling where there's really not anything really good happening. And then towards the end of the week, they put together on usually pretty bogus data, which again happened this week with things really not being all that well as they're purported to be, based on the typical media stuff and the Wall Street spin. And yet here we are with another real save of the market, right? We had a really kind of rough Wednesday where they tried to make a new high and rally this market, and then it failed to really do that, and then it rolled off, and then Thursday was pretty ugly, really from the start, and then there was a little recovery, and then they played their game they have been playing into Friday, and so far, things are up across the board, and I'm not saying there isn't real buying happening today, but I'm saying that overall, there's been way more days of selling than there have been days of buying during the day. That is the real session. And I call that sort of like being off, right? That's what I'm referring to here, as if I still feel like a lot of selling's happening by day. And they're being, very deft with their touch because they'll elevate a few things here and there to keep the indices looking relatively good. But underneath the surface, it's not as good as it was. Now, you could say, well, is that really that crazy? Maybe that's just a prudent thing to do, right? People just taking some winnings off the table and they're going to get back in if everything plays out swimmingly. And they're just being prudent. Could be, right? It could be. And I can't really argue against that. But my spidey sense is still tingling. The good thing is that despite things feeling off, we should know either like we're very soon, right, within the next few days, if there's going to be a contentious election fallout, or if there's going to be something a lot more clean that the market, many parts of the market seem to be uh, believing, right? Well, hey, this side won, and that's it. I still don't know how they see it that way, but I could be dead wrong. So not like I haven't been dead wrong about something before. Look at October. I was dead wrong about October. I thought it would be a lot more interesting because I thought there'd be a lot more shifting of things, but there really hasn't been. I thought there'd be a lot more shifting of polls and things like that that would move the market, and maybe just money shifting around, but didn't really happen. Anyway, at the very least, I would still recommend, right, that you learn the collar. There's so many other things you can learn, but the collar strategy is just, I don't know, for me, it's maybe the best thing out there to learn to be able to play defense without going into deeper details. I have a lot of VIX verticals on too. You might want to look into that, learn about that. We talked about that a lot recently. We talked about it today in cocktail hour. It's just been everywhere, but I'll show that briefly. And I've got something set up for that to give you an idea. Anyway, I would say, look, the bottom line is that we're in a tough spot, and really, I can save you a lot of time because I think you're either looking at election fallout, right, binary, where everything, we have a winner, it's clear, everything goes on accordingly, right, the normal stuff, which I don't think is going to be the case, or you're going to have this election fallout scenario or multiple scenarios, and that to me is not good, clearly, and so. That's what makes this tough because we can do all the chart reading we want, but that event is really the most important factor, right? I think it's not necessarily the outcome, because that to me looks like it is like clear that there's really been a Trump push since this month got started. It seems like there's a lot of things pointing in that direction, but and the market supposedly has been betting on that for a year, so that should be a fine outcome as far as the market is concerned. But if it doesn't play out that way, then who knows, right? So the thing is, though, the bulls are still in control. Breadth in sectors have waned. I think it's a little warningish, but it also could help bulls. So in other words, right, it's prudent in my mind that some people have decided to take some winnings off the table after some amazing runs right in front of what could be this tough election fallout scenario. But because they've done that, the market is no longer overly toasty to the upside. And so if they do get what they've been planning on, apparently, then you end up with this easy glide path higher because you're not overbought the way you were, and there's been some healthy corrective activity. So that's the interesting part of it for bulls. I still think rolling complacency is there. It's not that easily seen in charts. It has shown up a little bit more lately, the last couple of weeks. I think that the sector view market breadth has worsened at this snapshot in time. Looking at the put call, there's still a lot of complacency there. So what I've come across is that there's a lot of pro money that's supposed to be long the VIX. So that's a little scary because we're kind of in there with a lot of other professional people playing this that way. Maybe that's why I couldn't get my sort of VIX pop that I was looking for, so I could kind of roll up and take that hedge capital and just free roll it where I work into a hedge and I don't really have anything at risk that I originally started putting at risk, right? That was what I was hoping to do, the so-called house's money trade, right? But I haven't had enough of a pop to really work into that. I did get enough of a pop to, I think, make some good adjustments where I've got wider verticals now. But and I've got them in several different expiries spread out over several months because of different possibilities that are out there. The interesting thing, though, is that the dollar, TNX, the VIX, they did back off a little bit here and there, but they've also kind of popped right back up lately. So they're being super pesky at the moment. And so I feel like this is too the people are just acting again more like this is a vanilla election, and so that to me that's a mistake. I could be the one that's wrong though. So I just am very surprised because I feel like there's a collective amnesia with all the fighting that's gone on after elections. So the VIX just didn't get it done to this point. Maybe on Monday or Tuesday I'll get a little bit of a spike, and that will let me work into the fabled house's money position, which I would greatly prefer to having to leave capital at risk that I could otherwise not. But oh well, I'm still going to do it anyway, just because I think it's prudent, and I'm afraid of what the rest of my portfolio could suffer if there's a protracted battle over weeks or days, weeks, months. Who knows what it could be? So that's where I'm at there. I do think the megas and SMH, maybe they foreshadowed the failed breakout. They were close, but they really couldn't get it going. Other things were leading, and we didn't get that final breakout kind of to where everything sort of gets pinned at the new all-time high right in front of the election. We're off there. I mean, it's not a disaster. We're not that far off of it, but in the spin's going to be right. Well, the market was able to do really well without them, and now they're ready because they've corrected. They're ready to get going again. The bear spin's going to be, in retrospect, right? It'll be, were they telling us something if we do get sold off, right? Something really was wrong there, and that was one of the telling signs. So we still don't know what's happening there. SMH and the mini head and shoulders that's in there, lower high, I'll show that. But the fraud claims are growing louder there. So that's just what I'm reading, and that could be a big problem because so much was predicated on that. So if it turns out that the semis have been pulling some real shenanigans, kind of like Seagate Technologies a quarter century ago, and many other names, I can't remember them all, but there were all kinds of stories back then of things being stashed in warehouses to say that this many units had been sold, and they really hadn't been. But yeah, this is the kind of stuff that shouldn't go on with a publicly listed company, but does. That's the world we live in, and it's a lot worse than that. But anyway, just something to keep in mind, because if you're wondering, well, what could cause things to really unravel? Well, if one of the big leaders has been built on fraud, right, that big move in semis that really led the way, and that turns out to be a problem, along with an election fallout that lingers and there's uncertainty, right? That's definitely the makings, even without going into anything else. That's the makings of a more serious correction than a 3 or 4% pullback from the highs. Okay, so on that note, I'm going to reposition. And let's cover a few things before we get too far afield. Now, I don't think this is going to take very long today because that should be good for everyone. Because yeah, this is not that bad of a situation. So let me get my charts showing on screen 4, and we should be good to go now with the VIX. Yep, I think that's there. So what I wanted to bring up here, here's the VIX weekly, and you can see that the VIX has been moving up. So we've been talking about this really since this July area. And we've been saying that, right, this is when the VIX starts coming into, right, get prepared for the VIX to come into its sweet spot after the July earnings season peak. And then it would start potentially moving up. And it did. It's just been, I think, a little more muted. I really thought there would be one little burst that would get a little bit higher than, let's say, the 23, 24 range that we got to. We just didn't really get that. I mean, you got this thing back here. If you want to go into that August, I think that was a bad tick. But I mean, I thought there'd be something closer to the election that would take us into the low, maybe like the high 20s, low 30s type of a range, and then we'd see what would happen. But it really hasn't. That really hasn't happened. That really has not developed that way. So that just goes to show you, but it has elevated, right? I mean, it could easily lose 10 points, and that wouldn't be crazy, right? Getting back down towards 12 would put you down towards the lows. But it is a little strange with the market near highs that you're this high relative to where you normally are when the market's doing so well. I think we all know that's probably because of the selection risk we're talking about, right? So let me just show you this vertical. I have different verticals on. I'm just going to show one vertical. You can see this would be right the front month VIX. So we're talking about the NOV 20 expiration, 20 NOV, and I'm just looking at being long the 25s, and we're right here, and I'm slightly out of the monies, and I'm shorting these, right, to kind of bring the cost down. And what my hopes were, my goal was to have a nice pop develop, and then I was going to get out of this vertical. And I'm glad I had the vertical on because I never really got anything strong, super strong. Which I kept my costs in line that way from when I originally traded it. But I was hoping to get some nice money made with one really good pop beforehand. Then my plan was to basically morph this spread into, with whatever my winnings were at that point, take those and just put them into long calls only, right? So I'm uncapped in case we do really have a hellacious election aftermath. And if we don't, and I don't lose money because I was able to take profits I'd already made and put that into that uncapped hedge, that was what I wanted to do. But it's not working out that way unless I get saved by a late bell and they start getting a little worried here on Monday or Tuesday morning. I don't know what would cause that. Who knows what's lurking out there news wise, but it looks like I'm going to have to put some money at risk to have the hedge on against my portfolio rather than putting just winnings. So that gives you an idea, but you can look at this. I'm doing things like this in December, January, and February, and I may do more of it, as well in front of this election. I may do some a little bit further out in time. If you want to know where I'm going, I think I might do some in March as well. And I'm just spreading it out, and I'm just going to keep it that way. Probably do some March, honestly, maybe even a little bit of April, but just because I don't know what's going to happen, and I feel like there's a great chance that something will. That's where I'm at. So wanted to show everybody that and get that taken care of first and foremost. The SMH, let's talk about that one because I did mention that. And you'll see when I switch to a daily that, and shouldn't even be on this chart, so my bad. Let me get a less messy chart. So on this chart, we have a SMH, and let me try to crank this down. And I think this is, to me, like this is a little worrisome, and I've been harping on this, and I feel like I've been harping on stuff like rarely have I had to in the last month because October itself was such a disappointing dud. But I was talking about maybe there was a low or high put in earlier this week when this high was there. They did actually get it a little past there, but then it has rolled over subsequent to that. But anyway, there's kind of like a little bit kind of an ugly or mini head and shoulders if you even want to go there with shoulder, shoulder, right? And then you've got the head here potentially, if you want to call it that. A lot of people wouldn't call it that, but I'm just saying some people would. But that's really not, that's kind of ugly. That's kind of on the verge of dropping below a support line that I need to add here. And that's going to take me right there. And that's really close to breaking below there, which is right near the 50 in gold, which is right near the 150 in rust. So that's a kind of an important area with this low or high situation, right? And these lows here having been taken out, and we now have a new recent low. So it's at risk. They are doing what they usually do, especially late in the week, and erasing all the damage that really happened during the day for most of the week, during each day for most of the week. That's what's been happening. But this is really not, there's nothing disastrous here, right? You're still in a longer term uptrend. You're stuck in a consolidation. Nothing's terrible, but these little signs where things are not really working that great, you've got to pay attention to those. You don't want to read too much into them, but it's not looking that great and at the moment. And that's, you've got to that's all we have to go with right now until we see more price action develop. And it is a little bit of a concerning, I just think it's a little bit of a concerning area right now. And they are still technically holding up, but we're on the verge of where the weekly charts are going to maybe flip to a little bit more of a negative view. And that to me is no small thing when an important sector starts looking rougher on a weekly chart. And to me, that's what's potentially happening here. So you could see that you kind of would get the floodgates, and they would open up down to the 50 there and this other support line if we do take out this week's low in the semis. And that low down there is about, it looks like it's about 8% lower. So that would be a pretty decent pullback. And you got to be, I think, wary of that happening, right? You've got to be concerned about that. The other thing is, while we're here, let's take a look at just the megas as a group, and then we'll move on to other things. So let me get these popped in for us. Meta, we've got Microshaft, we've got Netflix, we've got NVDA, we've got TSLA, and that should do for most of it. And there you go. And so, yeah, they look like they were on the cusp, right? But they kind of made a new high there a few weeks back and failed and pulled back. They're just have lost their mojo at the moment. And it's very similar to SMH. You could say, well, it's not the end of the world. Look at the long-term trend. Remember, we're looking at a weekly chart here. Nothing really all that bad, but it is on the cusp, right, of inviting more technical selling because the weakness is there. So again, taking out this week's low could open up the gates towards traveling down towards this 50-week moving average at 222. Not a number that really means very much since we're looking at this mini basket or composite, but it just gives you a technical sense of what's happening. And yes, the long-term uptrend would still be in place and all that. You just have to go from there. That's why I like to do things incrementally, but not really great action, somewhat understandable. Not big on volume the way I used to be 25 years ago when I think it mattered a lot more, because the way that they've sort of traded around the exchanges, if you will. But you can see like just the buying interest, right? It just has really, really not been there. Volumes drying up. That is what you really do want to see at the end of a consolidation, though, is that there's no one really wants to transact big, and most people that have gotten frustrated are done selling, and then the trend resumes. But at the same time, if buyers don't show up, you've got a problem on your hands as well. So, but those do not look right all that wonderful at the moment. They do look like they're on the cusp of having trouble, and the weekly chart could flip on those to negative and also flip that way on SMH. Now, let us check out, where's that at? Why am I not? Oh, I know why I'm not seeing that. Let me just get us over to SPY real quick. And I want to pull something in. I'm going to cover things sort of in a little bit of a different way here. Let me get there it is. Yeah, so here's just the basic breadth view, one of them that I keep, but this is the one we usually go to. It's chock full of a lot of stuff. And you can see that this this has really been worse for the wear, right? Ever since we peaked in October, you can see that there's been deterioration in most of these measures. So end of world, no. Normal behavior in front of a big risk, yes. Um, so this is ironically, right, what sets up bulls for that great scenario to finish the year, right? Now that a lot of this has been backed off and you're not as overly toasty as I said earlier, that if they do get the outcome they want or ultimately get the outcome they want, they're going to potentially be launching, Operation Markup, Operation Santa, whatever they call it on CNBC. I almost forget because I try to forget what it is, but I think it's the Santa rally that they try to and the whole just end of year rally. But yeah, I mean you'll end up with a great situation that way. But again, I think a lot of this is just contingent on something that we just can't know yet. Which is that the polls were wrong many times in recent presidential elections. So I don't know what you can say. I mean, I don't know how. I just don't have a lot of confidence in anything like that anymore. Much like the medical establishment, but that's where I'm at on that. You can see it just hasn't been there. I do think this is somewhat natural, so I don't want to push the panic button and say this is disastrous. But it isn't good, right? It's not like we can say, well, this is good. It could end up being a healthy development in retrospect, and that will, as I already mentioned, but I don't think a lot of things deteriorating are good. And to that, we can add, where are they? We can add these. Let's bring these into our mix. And hopefully everyone sees my grid of 12 on the sectors, which used to really be just us in sector situation. But you can see, right, it's kind of weird where let's just rattle off a few defensive names like, right, healthcare, like Staples, and they've gotten hit down, for what they are, they've gotten hit pretty hard. Even XLU, which was really world beating at one point, you can see that's taken a beating, right? And these leaders, you get the double top rollover, you get this really strong move in XLI, that's rolled over, right? Surprisingly, discretionary, which was struggling to keep up with uh, XLP for a while, that's come back strongly. XTN came back strongly. XTN is still well off of the highs, though. This is a little misleading here. If I put this on a weekly, temporarily, you'll see that it's much lower than where it has been. So those are not out of the woods, but they certainly do look better than they have. But they're still struggling at resistance as well. Real estate, lower high, new low, rolling over. That's probably has to do with what's happening with maybe yields. Financials, they had their day in the sun. I think they're on the verge of potentially losing some support. We could easily demo that with hopefully in one little fell swoop here, just by getting a proper line drawn here. And I'd put a proper line at just about there. So those to me are on the verge of maybe coming down to the next level, right? Sort of if they did. Now remember, it's not a big mover, but you'd be talking about losing maybe like another 2% and then seeing if there's support there, that kind of a thing. So they don't look good, particularly good. XLE well off the highs, and maybe that changes. I know people think if Trump should win, it should be a clean election reaction, fallout, blah blah blah. Then we should have better times in energy. I don't know. That seems too easy, but you just never know. But I mean, certainly not really ramping, right? It's sort of still struggling. So XLK, critical leader, slightly lower high, double top, eye of the beholder on which you prefer. Never made it back to the high. Another one where, again, we've been talking about these sort of rising wedges and how they can be dangerous. And I think that's there, right? Like I would probably put that really about right. That line should really be right about there. So that doesn't look good to me. XLC, the communications, probably looking right, one of the best lookers out there, along with XLY at the moment. But yeah, there's a lot of other sectors that you can see have sort of gone off the rails, and what we have to decide is, right, is this really indicative of something larger, like maybe this economy and the global economy is not as healthy as purported, or is it just pre-election maneuvering, or both, right? And so that's where it gets tough when you get near something like this. But certainly, right, this is showing a little bit more respect for risk right now than some of the other things, major, like the major index ETFs. Something that's really not demonstrating the respect for risk would be this right here, which I'm going to bring over, which I think I brought over. Okay, there it is. And you can see that the put call, right? This is the CBOE equity put call, and there just isn't there aren't a lot of puts being bought in equities. So a lot of people, to me, are still asleep. You could say, well, they're all hedging in the VIX. Well, I think professionals definitely are hedging in the VIX, but as far as any other things, I don't think they are. I feel like uh, there's a lot of individuals that are long certain stocks that just don't seem to care. Now, the put call's been lower, but this is still a relatively, I'd say, low reading given what the kind of fallout we could have from this election, right? So that's one sign to me that there's a rolling complacency out there. We talked about a lot of things already, but let's get into the major four index ETFs as well. We'll get a yearly chart on that. I'll try to blow this up so you can see it better. And you can see that, right, you can see that we were struggling there. We finally got some selling. And you're getting the shorties, the SMAs, on the cusp of rolling below the 20 SMA there in light blue. So the 10 and 15 in white and red, respectively, are about to fall below the 20. And that can create, right, some discord. You come down towards your 50 and you get the typical reflexive bounce, and it happens late in the week, and it's the same old shenanigans using some EPS maneuverings and all that. It's the same old playbook that the gang uses. The bounce so far, not bad, but right, I'm sure they prefer to have marked it right back up to the 20. We'll see what Monday brings, but you're really close to breakdown mode. And you can see that rising wedge support that we talked about, which I'll highlight right here in SPY, that is not the line. This purple one is the line, dummy. There you go. And let me see if I can just extend that out so you can see it better. And that's it. And so we were working with that for a while, and you can see once we fell underneath that, it hasn't really gotten its mojo back, and now things have kind of started to potentially get worse. So again, worth keeping a support line there. Kind of tells you things are not really as wonderful, right? You could always get a false breakout and reversal too, but that you just kind of know that we're not in this anymore, and I've got to be ready for that kind of a thing. So that's really when that was the start of the tedium potentially ending, and I think really Wednesday into Thursday here is certainly when the absolute tedium that was October ended. Ironically, in the last couple of days, but at one point I was looking at this with Ryan, and I think we closed on September on at 573, and here we are, right, a whole month later, and we're at 573 ish almost. So October was at this point, considering that it's November 1st, October was a whole lot of really nothing, other than this kind of final quick swoon here. Relatively boring trading conditions, a little just disappointing to me. So if we go and look at the big picture here, which we'll do right now, there's still a ton of upside potential here, right? And so this was the shelf that we're operating on at 565. And as long as you hold above there, right, that's not a bad thing. And then if you hold above there and then you start resuming, right, and you break out, then I started thinking, you're looking at that end of the year 600 on SPY, 6,000 on SPX, that I'm sure that the gang would love to achieve. That's going to result in some really good bonus money. But 565-ish right now, probably, as they used to say, your number, because that's a big number, I think, right in there. You don't want to see that really become under serious pressure. Unfortunately, right, you're only about, you're just about 1% away, from off of where we are currently. Not to on today's low, you are not far away from there. So it's looking rough. Remember, this is a weekly, so things have sort of taken a little bit of a turn for the worse. But above 565, I think the bulls are still fine. Below there, they invite more spillover, and you could clearly visit, 20-week moving average and so on down. At that point, to me, I'd say probably 545 would realistically be where you go from 565. But it depends on what the news driver is. This is why I think you do need to I don't try not to let the news affect me, but one thing I think is important about news is that if it's basic stuff that we see all the time, you probably don't expect anything deeper to result from it. If it's something like a protracted argument over who won where, and that really the ultimate election result hangs in the balance, that's a problem. I think a bigger problem. Just my take on it. Not a good reversal candle here this week. We'll start out on that on the cues. You could see that, right? This is really a key area where they found support. You pretty much should use the 20-ish SMA on the cues at 478-ish if you want to say where does the real trouble start. I think more trouble starts around 478. Clearly, right? If they reverse this thing and get it back above 500 because they've got the news they want to work with, then you really have to start thinking about up and away, and where does that lead to? And in 8 weeks, they can do a lot. They can do a lot of work in 8 weeks. I mean, I think going up 10% in the last 8 weeks from here wouldn't be anything crazy or extraordinary, if they get what they want. I don't know if they'll be able to do it, but it is what it is. But let's look at it more quickly on the daily. I don't want to belabor anything, but I just want to pick out, those are bigger picture things, because I'm really talking about, I think, a big deal here and bigger picture stuff for the election, post election. So, yeah, so you probably have to crack the 50 on the daily first, and you may as well wait for the 10 to really tell you that you're out of the woods. But the news is going to tell you that. And I would think the market's going to gap before you even get a chance to react. If there is one, I think it's pretty binary. I think it's either going to be protracted, ugly fallout, or not. And if it's or not, great. I just have a really hard time, as I've said a bunch already, have a really hard time believing that to be the case, the way this country has become, and the way that everything's become so litigious over this past quarter century. So there's the cues, right? They have been a little bit disappointing. They also have the rising wedge that we could talk about to a degree, right? And you could sort of see that fell right there below. So you're in breakdown mode right now. You just don't know if it's going to be a false breakdown or a real one, right? So this is what we've been sort of warning about at some point that could happen. Let's look at diamonds and IWM. I don't know if I need to belabor these, but there's the same line we've been working with on the other ones. I just made it blue. You could see that broke down. Again, this is why I always, especially for newer folks, just keep drawing lines until you feel like your lines have relevancy. You'll get better at it. It's not complicated. People kind of laugh at this old school stuff, except for, people that have been around that know from experience that it's not laughable. It actually it is helpful. And when you're no longer kind of in a consolidating dynamic like you were for a while, then maybe something's changing, right? And you should maybe be looking at it a little differently. And if you pick up on that right away, right, then like, okay, this is maybe starting to turn into a little something. And you can see that if you started thinking that here and all that kind of thing, that they really haven't been able to get their mojo going, other than today's short squeeze of late, right? That's all they've been able to do there. So that's not a good sign. And I do think that you've got the weekly, is really starting to come under pressure on this one as well. So, right, the weekly is telling you a story that I think is somewhat serious, where you have to say weekly is a little worrisome. You know, it's not the end of the world yet, and it may not be, and let's hope it isn't. But it's telling you, right, that bigger picture charts are not as bullish as they were. They're starting to have a little bit more of a concerning kind of pullbackish look. So let's just call it what it is. But unfortunately, a lot of technicals could be blown up, you know, by the selection. That's why I'm calling it binary. That's why I'm not going to sweat it. You know, you've seen this from me. The 225 area to the upside is your first thing. Then you've got to really get past that 228 and change high, which is right there, which we were not able to do. Pretty much call it 229. So if you get through 225, you're next looking to get through 229. You get through there, then you're looking at 244. If this thing's really on its way, you have a ton of potential in here. So there's massive makeup, catch up potential. So something maybe to keep an eye on. But right, it's tried, it failed to break out. It's in like false breakout reversal mode. It could easily lose support here, and it's almost on the cusp of doing it. So this would almost be like another, almost like a wedge triangle that's starting to lose its support. Probably better to keep it off of these two wicks right here. So it's barely there. I would put the line there roughly. That's a little concerning, right? It's not too far away, but yeah, you may as well use this week's low. You lose this week's low, 20 weeks next, but then the bigger problem is that that's lost. You're probably looking at the 50 week. So that thing drops down towards the middle 2 somethings. Based on that look right there, lower high versus here, false breakout, making new low, using shenanigans as usual late in the week to keep things levitated, but on the verge of dropping. Yeah, and I think you clearly could see this week's low gets taken out. You're looking at the 100, and then you sort of get mixed up, like we said, in the 2 because the 150 and 200 are waiting for them there. Right. So that's that scenario. Now, how do you start feeling better about this? Probably need to have this closing high. That would be the one I would focus on, right? So that's going to be 222.46. At that point, just call it 223 to throw out a round number. 223, I'd kind of not worry about this wick. Not that it's unimportant, just that you can't wait forever. So I'd go with 223, and if they're hell bent on taking out 223, they're probably going to attack this, you know. And if they attack that, they're probably going to attack that, and so on and so forth, because they've got the clear runway, I think, right, for the rest of the year. We talked about the VIX already. Let's at least flash the fact that this dollar will not back off, which is very interesting. Not normally good for stocks. Stocks have been able to ignore this massive run back up over the last month and change. You're not at the highs, but you're not that far off the highs in the dollar. So the dollar's been really pesky and won't go down. Yields have been really pesky, and they will not go down, right? They are coming back towards near their closing high, right? That's where they closed at today. So you're barely off of that closing high, I think, right there. Oh, I've got the wrong thing. Like, out of habit, I just keep doing this. My bad. Apologize for that. It is a new high. I'm like, wait a minute. I kind of remembered from earlier. I'm like, I thought we did make a new high. But yeah, no wonder why I didn't have the right one. But there you go. I mean, that really, I think some of this recent inflation data and this calls into question this rate plunge. Like, we're supposed to see more rates dropping, you know, next week. That's the expectation, I believe. I think it's next week. And yeah, I mean, you tell me if the rates look like they're, you know, ready to roll over and start making new lows. It's very clear that they're not, and they're up, right? You're not far away. You're not all that far away from bouncing a full point here, which is just crazy. I mean, that's wiped out, right? If you do, you'll wipe out, you know, a lot of the slide into the summer low. You'll do that in just a little bit over a month, maybe like a month and a half, maybe 2 months. But yeah, it'll be right back. So not a good thing. We already did look at the VIX, so that we're not going to belabor that. One thing I will talk about, though, is XAU. Despite what some of the futures have done, you know, we've had a real back off here. As always, this is why I almost always tend to warn that when you trade in this area, it's very manipulated. There's guys all over the internet. You'll find a lot of people that specialize in this, and you can read up on it if you want to. But that's what happens. That's why it's just looks like a great trade, and they frustrate the people, the hell out of people in these things. So you got to be really disciplined with your risk management, position management in these things at times, because these guys are playing for keeps in that space for obvious reasons. You just got to learn about it. And that's pretty much it. So that's been a little disappointing. I'm glad I have something expiring today, an upside call in GDXJ, and I'm okay that it backed off because I wanted to have unhedged stuff going into the election, just in case there's problems and people start clinging to something. And they typically do tend to look to cling to things. Now, I've got plenty of other things in this sector as well. So I'm not really banking on just GDXJ and other options and other names. I've got physical and I've got this, that, and the other thing. So I'm just hedged up in those as well. I know RDDT. I talked about this on Cocktail. So did Ryan. So did Greg. Pretty much everyone did. We had this as a UOA name this week. We put in an idea because the UOA was essentially bullish. Trend was bullish. Market's been bullish. I thought there was potential for shenanigans. The reason I'm bringing this one up is the same reason I'm bringing this up. There's really two parts to this story. The other one is Carvana. This one had some short interest. This is a hated name. Another one that was in an uptrend. Another one that had UOA. Another one that had a potential catalyst of the earnings reaction. And you could see on Friday you close at 207.31, and then you trade up $52 right on Thursday. So the reason I'm bringing these up is not because they may have been great scores for people. They may have been great scores. I don't even know. The only thing I'm bringing these up for are, one, when we start seeing things that are this stupid, that's often been a precursor to that the market is running out of its ridiculousness, and you're getting towards an extreme. The public owns stocks like there's no tomorrow right now. That's also at an extreme. So that could also be a problem. It has been historically. But when things like RDDT and Carvana put together such ridiculous moves, right, where one day you're trading for, I don't care how great the earnings were. As far as I can tell, they still haven't cured cancer, these companies, that is. And yet, right, they're trading as if they do like the very next day. So 50% surges and all this kind of thing. To me, right, this is just market. Not that I wouldn't trade it, but it's just market ridiculousness, market manipulation, people that are on the wrong side that are really having the screws put to them. It's all part and parcel. But I mean, like, this is not a $20 pop, right? These are extraordinary moves. And for that reason, I've noted this in the past where things got utterly ridiculous like this. And that's often been your foreshadowing that, okay, the silliness in the market is so silly that so many standard deviations from where reality lies that it's gotten too insane. This needs to be curbed. There needs to be like a reckoning. So I'm not predicting that. I'm just telling you I've seen it many times, and just take it for what it's worth. Now, the other factor I wanted to mention on these two is that you have to respect the fact that this is when everyone's got this happening right early on. I'm not saying you shouldn't roll or adjust. I'm a big believer in rolling and adjusting. But what I'm trying to get out the message is that don't get caught up with a spread adjustment where, I want to sell these calls that I have, and then I want to I want to get into these simultaneously, where you're trying to execute on one options market and another options market simultaneously at a spread price. The reason I'm saying that is because you might not have a good market right when the stock opens in both contracts. And so if you have a wide market, you might not be able to get something done. And if you can't get something done, and you miss your opportunity and they start really reversing things hard on you, you could shoot yourself in the foot. So I would just say, right, you're having a windfall, be willing to pay the additional charge in commissions to have a second order. In other words, priority one is capturing your profits by closing out your long calls, right? Just close those out, make your money. Then if you still want to be in it, get right back in it with something else, right? With another separate order, because this just isn't worth it. It's just not worth it. You can play games and these things do reverse, right? So sometimes that opening print is great and the stock just reverses from there. And if you play games with that order, you can really get beat bad. So you don't want that. So I just wanted to remind everybody of that. If you're, especially if you're new, you may not understand it, but you might, you might end up, understanding it. What happened? Oh, I must have done something. So you might understand it after that. What's that? Okay, yeah, here's where we were. So let's continue with covering this stuff to kind of wrap up. So the reminder is, right, I've talked about this before. There's a ton of possibilities. I do think they brought the kitchen sink out to support this market, and I would just note that if a lot of if a lot of the sort of you get a change of administrations and you get this exposure of these statistics were not good, right? That a lot of these statistics were tortured and massaged, like a lot of people have been alleging. Don't know for sure, right, to the extent that's been happening. If it turns out to be true, and they just supported this market, which is really right, not uncommon. That's what the administration that's the incumbent typically does. But if it's egregious, it could really blow holes in the whole everything's wonderful story that they've been trying to put out. And by that, I just mean the typical suspects, the usual suspects. And so that could really change things and not for the good. If that stuff is just run of the mill, typical statistical sleight of hand, and they get everything works out and Wall Street's happy, I think you, like as I said, you could still, because of this global easing that's coming and them getting their scenario they wanted, they could be really happy and you could have a strong move into the end of the year. Could you get a sell on news where they get everything they wanted and they still sell? You could. I think that would be the surprising, outcome, because not that there wouldn't be some, an initial like profit taking this or that. It'd just be that, hey, if we drop 15% when they get everything they want, if there's nothing behind that story in terms of bogus statistics or whatnot, I think that would really surprise a lot of people. Anyway, so don't want to rehash this stuff, but you probably saw that there's negative stuff out there, just jobs wise. There's all kinds of things that have hit that have just been like, nah, that's not good. That's not good. That's not good. So it is what it is. I'm just telling you to just stay super disciplined. That would be what I would do. I think you have to be, whether it goes up or down, because you really could get into extreme volatility depending on what comes our way post election. I think that contentious election fallout is the most likely scenario. That means uncertainty. That makes predicting, exactly what's going to happen on the charts virtually impossible to do, for me at least. I wouldn't expect that to be good, though. I would expect the charts to roll over harder. I think it's going to take that kind of news to derail this market. And you should be, if you're seeing it get derailed and the election outcome is known, then I don't even know what to say. That might even be a bigger problem, as I've said, where they're selling anyway. So that might be like really bad news is yet to come or be revealed. So we'll find out as long as we stick around. So yeah, it's as I've been expecting it to be more volatile. That was dead wrong in October. It was very placid and boring, and I was very disappointed. But I do still see the potential there, and I still think this is it. The next couple of months to finish out this year are it. And if you get through the year and everything is resolved, then that would be great, and we're on to, let's say a stable situation in the market. That would be really good, especially with this easing coming. You could say, well, why are you cheering on more Ponzi? I'm not really cheering it on. I'm just acknowledging that that's the reality that they impose upon me, and there's virtually nothing I can do about it other than know that typically that helps lift equity prices, and we can try to make money for our families by going with the trend. That's it, especially after pullbacks where the trend holds. I still think that election fallout is underappreciated. The soft landing, I'm not so sure about too. I think the rate drop might be decelerating, and I don't think inflation's totally done from what I saw. For these reasons, I'm still at DEFCON 1. I've probably been overly cautious about being at DEFCON 1, but I'd rather be safe than sorry, because you just don't know when stories can break. I still don't think we're out of the woods on stories at all. So something could break this weekend. It could break on Monday. It could break, on Tuesday. I mean, it could break right after the election. I don't know, but I still feel like this is risky, and there's a lot of things we haven't talked about. So I think I'm going to end it on that note to try to keep this a little bit shorter. And I do hope that something that I shared with you helps you out this week, or some week in the future. But the final note I would make is that you could see that there's been deterioration, and you could see, I think, really that we are held hostage by this election, right? That is really the fulcrum, I think, one way or the other, and that's what makes it hard for us to engage in strong leans, right? Sort of coming up with that news neutral lean. I don't think it's the time for that. So when it's not like that, you're better off just being opportunistic, getting your singles in on maybe Monday and Tuesday, if you can, if their news is relatively neutral over the weekend, and then you might want to just turtle up or collar up or do whatever you're going to do, hedge, and wait to see what happens with this election outcome. So on that note, everyone have a great weekend. If you get this early, have a safe weekend. I want to thank you all for tuning in as always, and everyone take care and be nimble. Stay nimble out there. Thank you.